Hi, everybody. Thanks for joining me in our live session yesterday. And I wanted to just go through and address some of the stocks that you sent me to add to our discussion that we didn't have time for. Just to begin with, ZAG Corporation is the first one we wanted to kind of take a look at. And again, just to summarize, this was one of the new stocks. Clearly, a very positive trend if you take a look at what's going on here with the company. But the things I notice on this is basically that it has had a breakout above the previous high, if you can see right in here. And breaking out to a new high, it's always a positive thing. Now, notice the indicators are a little extended. So if something like this is of interest to you, again, kind of following on the coattails of Apple with the iPad, the iPod, and the iPhone, making accessories for all those things. Each little pullback, you can see it pulls back to the moving average, and those are obviously pretty good entry points each and every time as you go through. So there's our first one. The next one I'm going to put on our list here is SIRI. This is an extremely volatile stock, and it's Sirius XM radio, so it's the satellite radio company. The first thing, this was one that everybody's watching. It's doubled in value, so it's pretty to see here from $1 to $2.20 in 1 year. That's pretty outstanding. I'm just not a big fan, frankly, of buying real cheap stocks like this. This is a company burdened with lots of debt and some real challenges. It seems like their subscriber base is growing, but again, it's just price. I'm just being candid. Its price is something that scares me away. A quick analysis of this one would obviously show us a great trend, but you can see some pretty significant resistance starting to build here. 3 times it's touched at that 230, just over 230, and pulled back. Sitting right at the moving average, the 21-day moving average. Indicators, if you look at this last little part, are showing a bit negative. And so again, see if those indications, or see if those moving averages hold, the way I'd look at it. And then the real opportunity comes if there's a breakout above 230 and gets above the resistance. Those are the kind of things we look for. Should be coming up to an earnings announcement. If you see the little number symbols or dollar symbols in the phones, those are earnings announcements. So we're due for another one. I would suspect that they're probably announcing quite soon. So a good earnings announcement with volume on top. That could be the catalyst to push it through that resistance. Those are the kind of things that you ought to be looking at if that's a stock on your radar. The next stock in our list is DIG, and DIG is an ETF that follows the oil market, oil service sector primarily. It's the Ultra shares or ProShares Ultra Oil and Gas, meaning Ultra is what implies that it's a 2-to-1 leverage, so it moves twice as fast as the oil and gas market underlying index would move. A quick analysis shows the nice rise we've had. That was the last winter, basically with the high oil prices. Now it's been a little choppy since then. So again, we're always looking at the far right hand side of the graph, so just a couple lines to keep your eyes in the right spot. Significant resistance in that area around $60-$61, almost exactly where we're at right now. So again, it'd be really interesting to see. Oil's made a nice little move just in the last few days. You would have to say that, again, notice that this is moving twice as fast as the oil market, but if I draw this line right from where I'm drawing this line is where the indicators kind of lined up. So the line won't go through those indicators, but if you just look down vertically from the red line that I've just drawn, that's the last time that we had all the indicators turn positive at the same time. And as soon as it broke out through that moving average, notice there's an interesting thing that I see frequently, so let me point it out so you can see this. Right in here, you can see that the stock broke out, and then notice that it pulled back. I didn't want to do that. Notice that it pulled back. Let's get rid of that. That didn't go where I wanted it to. I apologize. Let's just use a vertical line. Notice that it pulled back after it broke out above the moving averages. It pulled back, and it pulled back right to the moving averages. Now, I don't know if you can see that line. It's a very thin line that I've drawn. And then it popped from there. So a lot of people, when they see these indications go and it's below a moving average, I personally like to kind of wait till they break through the moving average, and then people would say, well, I missed it. I missed the move. It took off, and now it's too late. And there's a big mountain there on the MACD, and it looks like it's about ready to start coming down. The momentum is declining, and they say I missed it. But so oftentimes, if there's good momentum in the stock, if there is a reason for people to want to buy it, it's probably not going to go away, just after that first little breakout. And it pulls back, finds support right there at the moving average, and then makes another nice bounce. Now notice that the indicators all started going positive after a very, very brief, negative move there. And so again, that shows great strength. It didn't lose all the momentum. It just barely dipped and then took off again. It's kind of like the train left the station. We feel like we missed it, but if they really are good stocks, so often it kind of pulls back if the station is that moving average. Pulls back and gives us a chance to get on. The thing to be focused on now with this stock and with oil, because this would be reflective of oil if you're trading oil at all. OIH is another one, and we could see probably a very similar pattern. We'll look at that next. Is the resistance right there with that upper line that I drew. So watch that closely. If again, it would take some volume probably to get through that, and I see volume kind of diminishing down here a little bit. So that would be a little bit of a concern, because usually to get through those major areas of resistance, you need a good push. The next one on the list was OIH, and this would be almost identical to the last one we looked at. Very, very similar pattern with resistance at around 165. The stock sitting right now at 159. Almost exactly the same chart as the DIG. The DIG will move faster because it's leveraged. OIH is volatile, but it's not a 2-to-1 leverage ETF. It's just, and it represents an oil service sector. So it's reflective of the stock market. When the stock market's going up, those companies involved in the oil industry do well. But when the stock market's going down, almost irrespective of what oil is doing, oil service companies generally are affected by the stock market, and you would see something like this typically decline. So anyway, those are two very related ones, so I won't spend much time on that. The next one is DRR, not a company I'm familiar with. Short euro. So again, it's a commodity ETF, or excuse me, a currency ETF. Pretty clear that there's a big downtrend on this, and it's a short euro. So with the euro strengthening, this one is declining in value as the euro is strengthening. Now, an easy way to look at this is if, because most of these things are all compared to the dollar. If the dollar strengthens, then if the dollar weakens as it's been doing most of the year, the foreign currencies increase, and in this case that pulls this ETF down. So again, looking at good support in that area of $36-37, but not a lot going on there in terms of changing a trend. The last one I'm going to look at in this call is GS and Goldman Sachs, and it's the big banking company, and bank stocks have been performing extremely well just in the last week or so, and you could see good support in that area. The worst of it's probably over for most of the bank stocks. A simple way to look at this, in addition to GS, is XLF, which is the banking ETF, and you see a very similar pattern to this. And so GS would reflect many of these same things, where you've got good support. The worst of the banking sell-off kind of ended right around there, and you can see a great bounce from that just in the last couple of days. 2 or 3 stocks have announced earnings, and they're growing quite well. So you can see positive indicators all around. Green on a MACD, green on a stochastic, a breakout of the moving average. Next resistance would be in that 1575 range. So there's the stocks that you gave me. I hope that helps you. If there's any that I missed or some that you didn't give me, send those out and I can respond to those privately through email or do another one of these. So thanks for joining me today. Hope that update was helpful for you. Best of luck on all your trades. We'll talk to you again soon.